Shut the door, please.
Perfect.
All right, Will, we're live. Episode
Awesome.
5.
I know.
Episode
Incredible.
5. Today, we've got with us a good friend of mine, Pat Montgomery from Verico SGH Mortgages Incorporated. He's a mortgage broker, also former Oshawa General. So big fan. Yesterday, we discussed physical fitness.
Yes.
Will, I'd like to report that I went online and bought some protein powder.
Right. The
Recommendation.
one that was recommended.
I did the isolate, not the casein. Pat,
Right.
Is that a good one to buy?
Yeah, it's great. I used it for years. It's got the BCAAs in there, the amino acids is what you need.
Awesome. Will, have you done your sit-ups today?
I did. Sit-ups, I walk. Then I had some pork belly, very healthy. Pork belly for lunch. Jerk pork belly that I cooked for like 5 hours, so it's quite tender.
Awesome. Well, we're super excited about today because I don't know about you, Will, but we've gotten about 500 questions about mortgages.
So many.
And I try not to answer too many of them because it's not my area of expertise.
I'm not an expert.
So I like to go to people, Pat in particular, to get all the information that I need because a lot of people around today have questions about mortgage deferrals, about why interest rates seem to be going up on fixed rate mortgages when the bank keeps dropping rates. And a lot of people have no idea what to do. So I thought, what a great time to bring Pat on to be able to add a little bit of clarity and give people some insight from inside the industry as to what may be their best options. What do you think, Will?
That's great. I'm excited about this. I have questions. Already have notes. These are here on my own letterhead, of course.
Nice.
But I already have notes. I am good.
All right. Why don't you get us started, my friend?
Well, Pat, thanks for joining us. I think the number one question I have received from people is the mortgage deferral program. And I guess there's people are applying for it. There are concerns. I know we talked about it in our pre-show thing here, just regarding, you mentioned credit scores. But my thought was, if people, let's just say they get a mortgage deferral, does it impact their term, like sort of the ins and outs?
Yeah, so essentially, all the major 6 banks have said that they're going to do 6-month mortgage deferrals.
Right.
What you have to keep in mind on this is that the interest on the deferred payments will be added to the outstanding balance, and interest will be paid on that amount. It's called rate on the loan. Essentially, your mortgage balance will increase, amortization will increase, but the payments stay the same, which gives people a break. At renewal, the monthly payments amount will increase for the higher balance. And the other thing they have to keep in mind is all the major banks and most of the credit unions, you still have to pay your taxes. You're not exempt from paying your taxes when you're deferring your mortgage. So it's good for a lot of people that have lost their job or their income and stuff like that, give them some time to get back on their feet. But you're not out of the clear by missing these payments completely, and your amortization will increase, and your payments, like I said, will stay the same until it comes time for renewal, and then it most likely will increase because the interest is incurred during the time.
So then people should keep in mind then that this is not that they're giving you basically a short-term fix, but you're not getting out of it, and in the long run, it may end up costing you more money.
Yeah, it definitely might. I mean, once you go in, let's say you're doing this for 5 years, and at the end of it, like you're really in like a first year on a 5-year term, and you're deferring 6 months, well, you're still paying interest on that time that you accumulated over those 6 months. And then when it comes time for renewal, your payments are going to be increasing. So it's not a quick, easy fix, and you're not just not paying that sum.
See, right. Yeah, because my first thought, and what I just throw out there every once in a while when somebody asks is, for me, if you're in a complete bind and you can't pay your mortgage, then I think obviously you have to do what you have to do today to survive.
Mhm.
But if you're one of those people that are on the fence and you still have some income coming in and you're like, well, it's going to make things a little bit tight to continue paying the mortgage, maybe I should defer it. Do you think it's a better option for them to do what they need to do to try to pay the mortgage?
Yeah, I mean, you're going to look at it as a case-by-case basis, right? If you have no income coming in whatsoever, that's probably your only option. If you're losing one, like say you're in a marriage or you have a common law and you guys pay your mortgage jointly, and one person loses their job but the other person's able to, keep it going, that it might be in your best interest to not do the deferral. I mean, it depends on a case-by-case basis, essentially. But you have to understand is that it's going to be the rate on loan. So whatever that payments that you're missing is added at the current interest rate. And then when it comes time for your renewal, you're going to be paying more and your amortization period is going to be longer.
When you say current interest rate, you mean so the current interest rate at today's rate or
Yes.
at the end of your?
So it depends again on what each bank has set in place, but from everything that I've read, it would be on today's fixed 5-year fixed rate.
Wow.
Oh, okay.
So that changes a lot then, because you could be at a really low interest rate on your mortgage, but if they're going to tack on the deferred interest at the current rate, you're going to be paying interest on interest, and it's going to be a lot higher interest.
And it depends on what the individual bank is saying.
Right.
They could, I don't have all the ins and outs on this specifically, so don't 100% quote me on it, but from my understanding is that is the case.
Right. Because everything's
I would like to do I would do a little bit more digging on it too, just to make sure whatever, if you're with Royal, which we don't deal with, like we primarily do with Scotia, TD, First National. And that would be something you'd want to ask them, what would be the rate that you would be getting on this deferred portion? You'd have to clarify that with your bank.
Deferred portion's the key there, what you just said. So if it's, let's say it's $2,000 a month, you're deferring $12K at 6 months. That separate lump is then there's, I guess it's added on plus interest. Now, is the interest added on? Let's say if you're 2 years in of a 5-year mortgage, is the interest added on or accrued? I guess whatever the word. I'm not a mortgage person. Accrued over 3 years and then tacked on that way.
From my understanding, and this is still all new and they're rolling stuff out, is that it would be, let's say you use that example of the $12,000. That rate on the loan, however the bank has decided to what rate they're charging that, you're being charged that until your mortgage comes to renewal. So let's say you're like, you're in the second year of a 5-year term, for example, and you're dealing with First National, then what would happen is over those 3 years, you would be charged that rate that they've set out for that $12,000 until renewal comes.
So you couldn't pay the 12. Let's just say you get your job back, at the end of 6 months. You're like, let's make it a goal as a couple, whatever. Then we're going to pay off this 12,000 before we renew. That's not possible.
You might be able to do that, and I don't have the answer for that specifically, but you would be able to, depending on like what is rolled out by these underwriters at this time, like you might be able to have that option to pay back without any penalty. Just like you would have like payback options up to like 15% on a mortgage without any penalties, things of that nature. So I believe a lot of the banks would have that in their structure. But again, that would be a good question to ask. Are you able to pay back that deferred amount only at renewal, or is that something that you can pay back once you get your job back and you start working again and you have access to funds? So it'd be a good question to ask. I don't have the 100% answer for that, but.
Awesome.
So this would be a great time to transition into my next area that I get the next set of questions on.
All right.
People are always wondering why, if the Bank of Canada rates are dropping, why are their fixed rate mortgage rates going up?
Yeah, again, everything from my understanding with this is that the 5-year fixed mortgage rates are basically indirectly tied to government bond yields. And that's why it's one of the most popular. Essentially, if the bond yields and the 5-year mortgage rate operate between like 150 to 200 basis points, and essentially, if the bond yields are going down and that are based on like unemployment, inflation, the GDP is doing poorly, then the 5-year mortgage rate kind of coincides with that to like 100 to 200 basis points. But in this time of uncertainty, the banks are really scared with liquidity, and they're scared at the fact that people are going to default on their mortgages, and they're kind of just uncertain. So you're seeing those fixed rates rise. But you're also seeing the Bank of Canada key interest rate drop again, in the prime rate, 2.45. You're seeing that the variable rates, the newer ones, are actually a little bit higher than what were previously done. And that's again because of uncertainty in the market.
So basically what the bank has done is essentially increase their spread.
To cover their defaults and cover their the instability, and essentially cover their butts, which they're in the business of doing.
Yeah, it's like a life motto. The bank never loses, ever. No matter what they do. They send out the emails, oh, we're going to defer your mortgage. We're going to chop this. We're going to help you out here. At the end of the day, they're making their money, right?
Yeah, and it's one more reason why I don't like the major banks is that you're seeing more and more sales-oriented tactics for people that are getting, sold different products that doesn't necessarily have the client's best intention in mind. It's only to make the major banks more money at the end of the day. Right. People are kind of perpetually getting into debt. And that's another thing I wanted to touch on. If you're looking to refinance right now, which I've looked at a couple of people. Sorry, go ahead.
Well, that was the next question. So keep going. Oh, you're good.
Yeah. If you're looking at refinancing right now, it's going to take you a long time because the banks are right now looking at new purchases first, people coming to term and renewals, and then refinancing second. And like the whole industry is working at home right now, which is kind of a complicated issue. So like, I mean, if you're looking to refinance, get your application in yesterday and kind of hope for the best.
You mentioned you don't like banks. Most people don't. But is there a difference between the big six banks and then like a private kind of outside the mainstream lender in terms of, I know there's difference in service, but in terms of this whole time that we're dealing with?
So if you look at like one of the major banks, they offer multitude of products, mortgages being one of them. If you look at somebody like First National, they strictly do mortgages, and that's what they focus on, is that type of lending. I find they're a little bit easier to deal with, and they're more willing to come down on rate or look at the client based on like on an individual case. They have a little bit more flexibility as opposed to what the major banks have on offering people good mortgages for their homes.
And that's going to be really important right now, because when people come to see someone like you to either buy a new home or to refinance, and let's say this is 4 or 5 months from now when recovery starts to happen, their income levels might be a little bit different than they were prior to this whole event. So a major bank, it's still going to be a lot more strict to try to get that mortgage pushed through than some of these other ones that you have access to, correct?
Correct. And they can move around some of their criteria for accepting mortgages, where banks are just a little bit tougher. And that's the other thing is that you want to consider this is if you do decide to do the mortgage deferral and you have no real option, is it going to affect your credit score?
Yes.
It possibly might. And there's a couple of things. So like if you missed your first payment, let's say April 1st, the lender could have already reported it to TransUnion or Equifax. If the lender reports it as late, it's late. And then basically you have to do a bunch of different things that are the onus on the borrowers. That what I'm suggesting is like request an electronic or written confirmation payment. that it's deferred. Number two, ask for the employee number or name of people that you speak with. Three, write down the day and time that you spoke with the person.
Awesome.
Three, place the documents in a safe place. Four, five, track Equifax or TransUnion reports over several months to make sure that if you're in agreement with your lender that you're deferring, that it's not reporting on your credit report. And if you see any errors, reach out to your lender and the agency, TransUnion or Equifax, and start a dispute immediately. That way you have a good paper trail if you're tracking this.
Now, you put that 6 pieces of ideas to do to try to protect your credit score together. If somebody wanted that from you, how would they go about getting it?
They could shoot me an email, mortgages.by.montgomery at gmail.com.
Okay, we'll link that to the video when we release it.
Yeah, mortgages.by.montgomery, at gmail.com.
Okay, mortgages.
Okay. Question. No, I have a question now. Now, I'm Mr. Real Estate Agent here. What are you, like, I know what we're hearing, in the real estate industry, that how are approvals looking for some people? I have heard certain price points, if you're under, let's say, 500,000 in Durham region, that is, that you may be, I guess approval might be a little easier versus if you're going at a higher price point. What are you hearing?
For approvals, basically case by case basis. Right. Like what I do, and what I tell clients is you can go online anywhere and like get a pre-approval from like RBC or pre-approval from like Scotia or like True North and just type in a bunch of information and then they say you're pre-approved for this much. But they don't have the backing and they're just kind of built on a house of cards essentially. So when I do pre-approval for clients, I get all their information. I get their credit score, I get their job, I look at their history. I put it all into my system on D&H Expert, and then I submit it off to my lender, and then I get a pre-approval that's backed by an underwriter. So when I say you can go buy a house for $545,000 with your down payment of 20%, you can. And I've seen deals where people get pre-approved by doing what I just explained, and push comes to shove, their financing is built on a house of cards and the deal falls through. That's happened a bunch of times.
Yes.
That's 100%. We've had so many clients go through that because when you're filling out that pre-approval, half the time the lender that you're dealing with isn't even really paying attention to you. So you write down, well, I make $80,000 a year. Okay, cool. You put down $80,000. Then when you buy the house and it comes back to the table, they're like, you're $80,000. And all of a sudden there's overtime on there. There's part-time work that isn't regular hours, and all these numbers end up going in, and so maybe their 80,000 is really only 67,000, and then the lender takes back the pre-approval.
Yep. Then everybody's put in all their hard work, they're stuck in a jam, and it's terrible.
Yeah.
So go back to your question. Well, pre-approvals, it's a case-by-case scenario, and people think they can afford what they can, but they can't sometimes, and you have to be certain that you have at least 2 years consistency in a certain job before any lender will really look at it. And if you don't, it's going to be difficult to qualify. If you're stated income or you're self-employed, we take a look at all your numbers, all your, your T1 generals, you get everything backdated. And, a lot of times I put people on plans. I say, okay, here's all your information. Here's what you want to afford, but reality is you're not able to yet. So contact me back in a year or so, and we'll take a look at it again.
Now, are you seeing any if someone is right now, even there are home purchases happening now, bidding wars happening? I've seen a couple in Oshawa. Are people seeing a delay in approvals? Let's just say if they have a typical 5-day financing condition. With the banks, being, people at home, whatever, is there delays?
Yeah. I would, there's going to be a lot of delays from everything that I'm seeing and I'm reading.
Is it additional 5 business days? Is it, 2 weeks, or does it depend again on situation?
I think it depends on the lender. It depends on whether you're using a broker or an agent or a professional that has good connections within those lenders' circles. It would possibly depend on the size of the mortgage, the size of the deal, but you would be anticipating, like, I don't know, 5 to 10 extra days.
Right. That's what I'm hearing. Yep.
I don't quote me on that, but it would just be extended.
Right, exactly. And then you mentioned having 2 years of consistent income, or consistency with the job, I should say.
Yeah.
And let's just say now we are in this time,
Yeah.
April 2020, a good month actually, good month to be born. And
Will's
and there you
birthday
are,
was
your job has been interrupted. You go back to your job in July. 2 years from July, 2022, you want to buy a house. Will this weird time that we're going through, do you predict, have an impact on people's ability to be approved if they defer a mortgage, or two, they have some kind of financial constraint, either pay reduction or layoff? What are your thoughts?
That's a great question. I mean, there's a lot of unknowns there, right?
Right.
It would come down again to the case by case basis. What does a person do? Is it like, if they're not an essential service, they're employed, in something that it was no fault of their own that they were laid off and they don't have any income? I believe any lender or any broker operating on their behalf, or mortgage agent operating on their behalf, would kind of push that case for them, that say, listen, like, this is a global pandemic that was completely something that was out of their hands. And I believe that the major banks and the credit unions would probably have something written in response to that as an exception clause. And I can't say yes or no really, but I have to imagine people aren't going to be penalized for something that's completely affected the whole global economy.
Right. Because my thought was, if it's, if you're able to afford your life still right now, let's say you're not working, let's say you're like me or everyone here who is self-employed, whatever, and you're still able to function normally by not, taking whatever you can take, or missing, or delaying mortgage payments, that would be probably best if you plan to do any kind of move or anything majorly financially in the next 2 or 3 years.
Yeah.
I mean, that's just my assumption. I know genie, but that's my assumption.
No, you kind of look like a genie.
Thank you. Because I'm kind
Nice
of
shine. It's really nice having Pat on. We finally got a guy with hair.
I know. I've been adjusting my screen because there's a, like, literally, I'm like, there's a sheen on my, like, I'm like calling Batman. Look at how shiny my head looks. Like, so yeah, I'm filling with this.
We spent 3 straight meetings where I needed sunglasses from the shine coming off all our guest heads. Pat finally has some hair. It's very nice.
So maybe you might be able to see the future then, Will, if you're a genie.
Entirely possible. It is. So here's another question then. So say someone right now is in a situation where they do want to make a move, maybe in a year. They know that they're going to have some issues with payments, not maybe on the mortgage, but other things that may impact their credit score. What are you sort of providing to your clients who may be buying in 12 to 18 months in terms of trying to minimize damage to their credit score, if that's even possible?
Say that question again.
The question is, if someone, let's say someone is thinking about moving in, 12 months to, to 18 months.
You want to move about 12 months to a year, okay? Yeah.
And, their income might be impacted. Like, there's some people that I know have taken pay cuts during this time. May still pay their mortgage, but may have delays on other bills.
Yeah.
So,
delay, or sorry, not delay. Report, document. If you're delaying on bills, let's say, like, we all know, like, my major bill with my household is my Rogers bill. I mean, you look at a lot of these companies, and you've just been inundated with so many emails out there saying what they're doing to support people because of COVID-19, right? So reach out to your the people that you have to pay your bills to. Say, this is the situation that I'm in. Have it documented in an email. Keep track of that type of stuff and say, it's no fault of my own. I've lost my job. My income's been affected. I need some help here with my payments on my Rogers or your heat or whatever it is. And just have like essentially a documented chain of communication with the people that you're going to be prioritizing your expenses, right? Like if your income is dropped by 50% or 60% or 80%, like we don't know what's happening with the government yet when they're issuing those $2,000 a month to help people, right? Like have all of your documentation in order and reach out to the people that you can't pay. Rogers, Enbridge, whatever it is, your renter, if you're renting a place right now and you want to buy a property in 12 months from now, have that documented, have that communication, because I can't see in the near future people being penalized because of what has happened to them.
Right.
So
that's good.
Does that make sense to you? I don't know Jeannie either, but yeah.
That makes sense. That makes sense.
From everything that I've gotten from what you're saying, because one of the reasons that I like Pat as a mortgage agent is he spends a lot of time educating clients.
Yeah.
Right? Like education is a very, very important thing for Pat. And so it's just when a client can sit down and find out that their mortgage agent has their best interest at heart, it makes the whole transaction a little bit better. But from what I'm getting from what you're saying is with all these documentations and everything else and people who are worried, when you go to the lender and speak to them on behalf of the client, you have a lot more wiggle room in that area than, let's say, if I walk into my RBC and I sit down with the person there and I say, here's kind of what's happened. They don't really give me a whole heck of a lot of leeway as to what I can do.
No.
Right.
And we deal a lot, Verico SGH with Scotia. That's one of our major people that we deal with, the lenders. And First National I deal with a lot as well. And you couldn't just walk in off the street as a potential borrower and go to First National. So I'm cultivating those relationships. And if I looked at like a specific scenario where someone was out of work for 5 months because of COVID, I would tell them, if you're a realtor, Will, and someone's looking to purchase and this has impacted them, start the communication chain. Email those people that you can't pay right now, or the companies, and I would take like that email block and I'd have it, and then I'd request that from them as part of impacted them, and then I'd submit that to the lender and say, listen, this is what's happened with the client. They've had 3 years of consistent income or whatever, but they were interrupted at this period of time, but they didn't just sit on their butts and wait. They reached out and started to be proactive about it. And what can we do for them? Who knows what they'll say, right? We don't know what the lenders are going to say in the future, but
exactly.
Right.
That's the only thing you can do is build the case. Yeah.
Exactly. I mean, and most people need to trust. They need to trust themselves. And what you're saying there, Pat, which is good information. You mentioned Rogers, and Rogers is a big company, like every other company. And I know and document who I've spoken with, dates, times, reference numbers, because they deal with a lot of people. I talked to someone who I know works at like TD, and thousands of people are reaching out to banks now. So there's a lot happening. And I think people need to realize that no major corporation is your friend. So you need to ensure that you are protecting yourself by documenting. And because I have been saved, Rogers have messed up many a time. Rogers, like all the companies I deal with, Ellis, all of them, because I know that I noted something that they did not, and the customer is always right. So it has helped you out in the end, and I think that advice is important. Stop smiling, Dad, but yeah, I'm a difficult I'm a difficult customer in general. I don't yell. I'm just you got to be fact based with these people to get what you want.
Yeah, you document. Like I had a client that I just got off the phone with last week, and I'm looking at her file now. She's looking to refinance, and essentially before this happened, she got a quote at like 2.45. Or is it 2.76 on a 5-year fix, went on vacation. Her mortgage professional at the bank was on vacation. She came back after COVID and they said, you're looking at 3.9 right now. And they just no communication, said, sorry, that's it. And that turns her off from the bigger bank. And now I'm kind of dealing with it on her behalf and trying to get her something competitive anyways.
Right, because again, people always seem to, and I hear this all the time. Well, banks, my God, they are, they're supported by the government. They're the best. But, I always say you like a car, when you buy a car, even though I know what car I'm going to get typically, I shop around always, that you need to use someone that's an expert, I'm a mortgage person, or someone that you trust in the bank that, will work, that. But by using a mortgage person, you are going to have someone that's an ally that will support you during this transaction. As a real estate agent, I am not a mortgage person. I will refer someone, but at the end of the day, that part of that transaction is between them and their mortgage person. And I find when people go with a mortgage person, typically they get a result where they feel like they're being supported. Versus, I'm not knocking banks. I'm with Scotia personally. That with banks, you feel like you're just a number and you're a file number, but there's no real relationship.
I got something to add to that one.
Oh, your hands up. Yes.
Yes,
Mr. Baker.
I used to work for Scotiabank. Now, correct me if I'm wrong, Pat, but you also get to go through a different channel when you go to the bank. Is that also true?
Yeah, broker channel. So like I get rates, broker rates that people don't get just by walking off the street.
Right. And this is why I try to direct all of my clients to go see Pat, because I worked at Scotiabank. Well, throw a quick little anecdote story in here. Had a client comes to me for the mortgage. I go to put the mortgage through. Bank declines it. This is going back like 7-8 years ago. So I send it to a broker friend of mine who decides to work with the client. Client's like, oh, he's so wonderful. He's so wonderful. Gets the lady approved. You know where she got approved? Scotiabank. Like, so the brokers, they have a much easier time getting mortgages through than what you would get if you just walk into the bank.
Right, because most people go into a bank, I did it for years, like 15 years. You go in, you renew, whatever. And then the last time I was like, I'm just going to use a mortgage person because I'm a real estate agent and one of paying these ridiculous rates. And ended up going to Scotia to be with TD for like 15 years. And and my guy reaches out, you get that. I mean, everyone's busy, but you get the cards, you get the phone calls every quarter. You have that constant communication with your person. And I think customer service is essential in any business, because I think people need to feel I think real estate agents, car salesmen, which I sold cars too, mortgage people, all the bad rap, and I think communication and people feeling supported will help, I think, cleanse that image of the industry and allow people to trust, agents, mortgage brokers, bankers, whomever, moving forward. I think that's the key. And I think what you're providing today, and information-wise and just basic due diligence, is essential for people getting what they want out of this, out of buying their home or any kind of transaction with, in life.
Yeah. I think the other thing to consider too is when you're looking at like RateSpy, you're looking at these online rate hubs for what is out there. They're very misleading, because as soon as you get on there, it's like 5% down, high ratio mortgages where they give you like the lowest rate possible. But a lot of people don't specifically get that because all their variables are a little bit different. I mean, the down payment that they have, like if you're looking at like a conventional or like an insured mortgage, like your rate's going to be higher than it would be if you're, if it's an insurable mortgage, it's going to be higher than if it was an insured mortgage. And I think those are all just new terms that are going out there. Right. And, you have to be very careful, because whatever's the lowest advertised rate may not necessarily apply to you specifically.
Right. So I guess what we're getting out of this then is that it makes sense for people, one, to shop around, and two, to work with someone that they trust.
Yeah.
What are your recommendations for people when it comes to them, trying to build a relationship with a bank or a mortgage person? What are the things they should look for?
You just can't essentially promise the best rate until you know exactly who the client is. You can't promise the best product until you've done your due diligence and you've looked at their credit, you looked at their job history, you've done your all your information checking, and you don't want people to overextend you. There's a lot of businesses and brokers out there that fabricate information to get people in the houses, and you want to be careful of that you don't overextend yourself and you don't get into something that you can't afford, because then eventually you will lose it. And you want to make sure people have clarity and consistency with what you're getting. Sometimes you're not going to like what you hear, but at the end of the day, it has their best interest in mind. Instead of someone making, like a broker making an extra $200 here or there, you want their best interest.
Now, you mentioned earlier, and I see this sometimes where someone gets referred to you, and then their credit or their finances are not the best. You mentioned a plan. You know what would be involved in someone getting into a plan with you? Is that what
Yeah. So basically, I have about, I don't know, maybe about 10, 15 that I've been working at right now for the last couple of years, where I've taken all their information. They're not in an ideal job right yet, or they've only been working for 1 year, or their credit's taken a dip. Whatever the circumstance is, they just don't meet the criteria of like an A lender, and they don't want to get on to like the B side right away, which I have access to. So I have access to like B side lenders like Home Trust, different banks, or sort of different credit unions, and private if I want as well. But if they don't want to pay higher interest rates through like a B side or a private lender, I say, here's what you need to do to improve your credit. Some people don't know about like high utilization of a credit card. They could have like a $500 credit card and have $450 on it, and it's killing credit. So wipe that right off, do A, B, and C. Let's improve your credit score over the next 6 to 8 months, and then revisit and see if we can get you on the A side type thing.
Right.
Awesome.
Right.
That makes sense. That makes sense, eh? Yeah.
Perfect sense to me. Dan, you understood it?
I got it. I got it, Will.
I know you're in Bowmanville. I know it's really far, but yes, I want to be sure that you understood it.
No, I got it, and
I think I'm understanding this. Who knows? I've been talking with an 8-year-old and a 5-year-old for the last 24 days.
Oh yes, people. I will say this right now. I love having no kids. When people tell me why don't I have kids, I'm like, well, it's for right now. After 42 years, I can say it's because of COVID-19. My life has never been more relaxed. My house is so quiet, it's so clean. I do whatever I want. I finished Ozark last night.
Good show.
It's amazing.
I told my son today, because I told him that Pat was coming on, and Pat was going to get us into the Oshawa Generals dressing room on the St. Patrick's Day game. But now everything got canceled, so we weren't able to do that.
Right.
So he was all disappointed. He was really mad when I came down to start this podcast.
We'll get in there for sure next year.
Right. So OHL done, like they're not having playoffs or anything?
I don't know what the NHL is doing, but the CHL is done, I believe.
Yeah, they canceled everything. They canceled the Memorial Cup, all of it.
Yeah. Like, I don't see this, at this point, these are just projections. I'm no genie or anything. But I think, at this point, if school's back in September, that's a plus. I just don't see school going back this year. I'm lucky that, I got 2 beautiful boys here, 8-year-old Connor and soon to be 6-year-old Owen. Thank God my wife knows what to do with them all day. But, it's hard on families, right? And imagine you lose your job on top of that and you have to be at home. Like, that's why it's good we went over these mortgage deferrals and, they check your credit, all this stuff. But, yeah, it's definitely a busy house. It's not as quiet as you that you got there. Well, that's for sure.
Yeah, my dog at times barks. And this disrupts my day, but I make it work. I make it. We're no homeschooling here. I just make it work.
And you're on house party all day.
Okay, dude, I have this here. I have a MacBook, which you said was a bad purchase for right now, but whatever. And I added it to I was on House Party, which is, what did this add? A great app. And Dan, you're on it all the time too, so you can, go. Somewhere.
I'm not. I just click on it because it just happens to pop up, and then I see your room with 17 people in it.
Hey, dude, I love the app. It's on my my laptop now, so I'm getting notifications constantly. But I think it's great. I do. I hate the phone usually after hours, but in these times, it's like 1990 all over again, and I love it.
Awesome. Well, Pat, we got an awful lot of really great information. I think
Yeah.
it's really going to bring a lot of value to the people that are going to be watching this. Just want to thank you for coming on and spending an hour with us today. And we'll put your contact information. So it's mortgages.by.montgomery@gmail.com.
Yep. And there was just one thing I wanted to clarify is on the deferred payments, that amount, that 12,000 we talked about. Check with the lender to see what the rate is on that deferred amount,
Right.
and also to see if you can prepay that once you get back on your feet, type thing. That's the only thing I really want to clarify with what we went over. So, yeah, I appreciate being on here, guys. I really do, and it gets me to have a conversation with adults. It's not my wife right now, and that's although I love talking to her, but yeah.
Well, I agree with you fully. I wish I lived alone sometimes. I am kidding, guys. Love my wife. I love you. There you go.
Awesome, guys. Well, we'll cut it right there. Have a great day. We'll talk to you guys soon.
All right, have a good one, guys.
All right.
Well, thank you.
See you later.
All right.